Hi guys, I hope that you're all doing well. This is part 2 of inventory for grade 12s, and I said that in this video we'll do different calculations starting with the cost of sales. Right, so the cost of sales is the cost of inventory that was sold during the year, and the formula is operating inventory plus purchases minus closing inventory. And again, if you want the different formulas, you can send us an email or text us on WhatsApp and I'll provide all the formulas, and I'll most probably give you tips on how to remember these formulas. Now let's try an example. If we have, let's say our operating inventory is 20,000 Rand and our purchases are 80,000 Rand, then our closing inventory, let's say it's 15,000 Rand. To calculate our cost of sales, we'll say we have our operating inventory, which is 20,000 Rand, minus our purchases, plus our purchases, which is 80,000 Rand, minus your closing inventory, which is 15,000 Rand. And 20,000 Rand plus 80,000 Rand minus 15,000 Rand is 85,000 Rand. So if they ask you in a question paper to calculate the cost of sales, you have to remember this formula. And as I said, you can send us an email and I'll share these formulas with you guys and give you tips on how to remember them. Now let's move to sales. What are sales? Your sales are the income earned from selling inventory. For example, let's say a store sells goods that are worth 150,000 Rand. A store sells goods that are worth 150,000 Rand. If you have to quote your sales or to do any calculations that include sales, you'll see that your sales are 150,000 Rand. Basically the money that you make from selling something. Now let's move to gross profit. This is profit made before expenses. It basically shows you how much profit was earned from trading activities. The formula is gross profit is equal to sales minus cost of sales. Okay, so for example, if we have sales that are worth 150,000 Rand and our cost of sales are 90,000 Rand, we'll say 150,000 Rand minus 90,000 Rand, which is 60,000 Rand. So this is your formula when finding the gross profit. Now let's move to markup. This is the extra amount added to cost price to determine the selling price. And the formula for markup percentage is gross profit over cost of sales times 100. Now let's move to gross profit percentage. This shows how much sales became gross profit. And the formula is gross profit percentage is equal to gross profit over cost of sales times 100. So what you guys should realize is that markup uses cost of sales and gross profit percentage uses sales. This is one of the most tested theory questions, so please make sure that you remember the difference. Inventory turnover rate. This shows how many times inventory is sold and replaced during the financial year. The formula is cost of sales over an average inventory. Now let's do an example. So let's say that we have a cost of sales as 300,000 Rand, operating inventory as 40,000 Rand, and closing inventory as 60,000 Rand. So our formula is there. We have cost of sales over average inventory. Okay, so we already have a cost of sales, which is 300,000 Rand. We don't have to calculate it. Now let's find the average inventory. To find the average inventory, we have to say our opening inventory plus closing inventory divided by 2. So we'll say opening inventory, which is, let me write the formula for you guys. Average inventory is opening inventory over closing inventory, plus divided by 2. Okay, now let's substitute into our formula. We have opening inventory, which is 40,000 rand. So we'll say 40,000 rand plus closing inventory, which is 60,000 rand, all over 2. And when you calculate this, you will get 50,000 rand. Okay, now this is your average inventory. We just calculated that. So we have this part and we also have our cost of sales. So let's say cost of sales over average inventory. This will be, our cost of sales is 300,000 rand. So this will be 300,000 rand divided by average inventory that we just calculated, which is 50,000 rand. So when you calculate this, you should get an answer of 6. So this is the inventory turnover rate, which basically means how many times inventory is sold and replaced during the financial year. So your answer has to be 6 times when dealing with inventory turnover rate. So that is the formula. Please make sure that you memorize this. Again, send us an email to get the PDF. So for this business specifically, it basically means that the business sold and replaced its inventory 6 times during the year. So how can we interpret this information? We said that the business has a turnover rate of 6 times, right? So what this basically means is that it has a high turnover, meaning inventory sells quickly, because they had to do this 3 times in the financial year. Secondly, there's good management. Okay, these are just notes on the side. If they give you a question and you maybe have to interpret turnover rate, these are the reasons that you might give, provided that it's like many times, you haven't done it maybe once or twice. Okay, so if you have a low turnover, we might say that inventory sits too long, or that possible stock obsolete, or that possible obsolete stock. And by obsolete, it means that the products that you have are most probably expired or they are ruined. So you guys should know this about the turnover rate. And they ask you to interpret, you'll see that information. This video was brought to you by Spotify. Whether you love discovering new music, listening to podcasts, or creating the perfect playlist, Spotify has something for everyone. With the free version, you can enjoy millions of songs anytime, anywhere. Want the ultimate experience? Upgrade to Spotify Premium to enjoy ad-free listening, offline downloads, unlimited skips, and even better sound quality. No interruptions, just non-stop music and entertainment wherever you go. Download Spotify today and start listening to music your way. Now let's define a few things. In inventory, we also have stock shortages. What this basically means is that physical inventory is less than the accounting records. Okay, you have less than what is stated in your books. So causes of stock shortages could be theft. If somebody steals your inventory, you'll obviously have less goods in your company. Then it could also be damage. It could be recording errors, incorrect stock counts. These all fall under shortages. Okay, now let's do an example. If the records show 500 units, but the physical count is 470 units, to calculate the shortage, we'd obviously say 500 units minus 470, which is 30 units. Now we have stock shortages. What about stock surplus when we have more? Stock surplus is basically when physical inventory is more than the accounting records, or as they might say in your textbooks or different materials, when physical inventory exceeds accounting records. That means you have more stock than what is written. Now the causes of this could also be recording mistakes or purchases that aren't recorded or counting errors. Now let's discuss different internal controls of inventory. Okay, so internal controls, let me write this down. These are basically procedures that are used to protect inventory. Okay, in terms of the internal controls, let's say receiving inventory. A control or a measure that we could take could include checking deliveries and comparing invoices. In terms of storing inventory, we could say different measures like locking storerooms, security cameras, as well as restricted access. In terms of selling inventory, we could say use cash registers or issue receipts, and lastly, we might have monitoring inventory. Measures that we could take include stock counts, inventory reports, as well as reconciliation. Okay, so in terms of internal controls, you just have to be open-minded and think of different points that you can apply, provided that you're given a certain scenario, whether in a textbook or in your exam. Now let's talk about typical theory questions that you guys should expect. This could be easy marks that might boost you in your exams. Okay, let's recap. You guys know that inventory is basically the things that you buy and resell in order to make a profit. So what if they ask you about the importance of inventory? Or they might say something like, why is inventory control important? You could give different reasons like that it prevents theft, it prevents losses, improves accuracy, and it protects assets. Okay. Now the other one, let's say, why perform stock counts? Why should you count your stock? Firstly, to verify your inventory, obviously, again, to detect shortages, and lastly, to improve reliability. Now let's talk about interpretation questions. Okay, remember, I'll share these notes with you guys. What is inventory turnover increased? What it means is that inventory is selling faster and there's good inventory management. So an advice that you might give a business owner is that they should continue the current inventory strategy because it's obviously working. You guys know that turnover is how many times inventory is sold and replaced during a year. So if there is high inventory turnover, then it obviously means that things are getting sold faster. So the system that the business uses is obviously good for their business. So what about inventory turnover decreased? When the inventory turnover is low, that basically means that inventory is moving slowly. It's not selling quick. What's an advice that you might give to business owners? We could say something like to reduce inventory levels since they have a lot of stock. Remember, you always want to sell all of your inventory. The whole point is to buy something and sell it as quick as you can. So when the turnover is low, that means that you might probably have to decrease the amount of inventory that you have. Secondly, we could say something like increase the marketing. Why? So that people buy more of your items so that you have less inventory on hand. So when you get questions related to, for example, interpretation or typical theory questions, just make sure that you're open-minded. You can just scan through the notes that I've sent you and maybe go through them maybe 2 to 3 times, probably a day before your exams, and you'll get a hang of what the notes basically mean. So what about gross profit percentage increased? What it means is that there is better or higher profitability, there are higher selling prices and lower inventory costs. Okay, when you have gross profit percentage increased. What about gross profit percentage decreased? It means there could be theft, discounts, as well as increased inventory costs. How would you advise a business if their gross profit percentage decreased? You would say investigate inventory management and review pricing strategy. And I will say that is all under grade 12 inventory. In the next video, I'll do more activities under finding the valuation of different inventory systems, and then we can also try different inventory systems. Guys, what you should remember is that you know what your inventory is, right? You can explain what inventory is. It's basically things that you buy and plan to resell in order to make a profit. Okay. Then inventory systems, you have the perpetual and periodic inventory systems. With the perpetual, remember, you always count your stock whenever you sell something. And with the periodic, you count your stock at the end of the financial year or at a later stage. So we also know what the FIFO means, first in, first out. We know how to calculate it. We also know how to calculate weighted average, or even the average cost. We know how to calculate the cost of sales. And you guys also know the specific identification method. I didn't write this here, so I probably have to update this list. You also know how to calculate your gross profit. You know how to calculate your markup. You know how to calculate the gross profit percentage. You know how to calculate inventory turnover, calculate inventory shortages, to explain internal controls. We haven't really done analyzing inventory performance, but if you know internal controls, or the theory part that I did, you will know this. But remember, I'll do more videos and I'll cover more inventory parts. And in terms of advising business owners, this was featured in internal controls. So from calculating the cost of sales until advising business owners, or until, let's say, stock shortages, this has to be information that you will cram. You have to cram the cost of sales formula, the gross profit formula, the markup percentage formula, calculating the gross profit percentage, inventory turnover, and the inventory shortages. Okay, this is the information that you have to cram. You need to know the formulas. Repeat them as many times as you can before you write your exam, so that they really sink in. Okay, so we've done a lot under inventory so far. The first video is probably over 20 minutes long, and this one will be about 11 minutes long. So I want to do more FIFO, weighted average, and special identification videos with you guys, more activities so that you understand it. And from there, we'll do different past question papers. And I'll most probably include a few questions about cost of sales, gross profit, markup percentage when we do these inventory topics, the inventory valuation system topics. So thank you guys for watching. Please like and subscribe. I'll see you in the next video.